good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 538th installment of these educational videos. Traders, this video is being filmed on February 24th, Sunday evening for trading. Did I say February? Am I out a month already? January 24th for trading January 25th. That's Sunday into Monday, 2010. Traders, right off the bat, I'm going to mention a few things that we talked about last week. One of them is the OMNI is flip-flopping, or at least it was. The OMNI started to flip-flop 10, 12 days ago and just went wild for a few days. That is uncharacteristic of the OMNI and will usually tell us that a trading turn or a sea change is coming, right? And we did that in the video for you last week. Then, because of the flip-flopping, it created what I call a flat top, and flat tops, as we know, produce market drops, and that is exactly what happened in the indices. So after the OMNI started to flip like crazy, then it suddenly pointed straight down, and so did the market go straight down. So again, traders, the OMNI never flip-flops for no reason. Last week was absolutely, and the week before, was absolutely a telltale signal that this market was getting ready for some kind of a reverse. I did say in the last video there is rare occasions where OMNI flip-flop means a continuation, but I didn't think that was the case because we had the flat top here. And again, flat tops produce market drops. That is an OMNI Trading Academy Oscarism, so to speak. I don't know many people who follow that, but the ones who do usually end up catching the market on the right side. So look for your flat tops when they show up. The next thing I'd like to discuss with you is the OTAPMA, or the OMNI Trading Academy's Proprietary Moving Average. Traders, the indices have raced down to the OMNI Trading Academy's moving average. Out of nowhere, in 2 days, they all blasted right down to the average. And it's not just the indices that are there. Traders, out of the markets I studied, and this isn't even the whole list of markets that reached the OMNI Trading Academy's Proprietary Moving Average this week, but let me read you this list. Traders, again, I'm only going to show you maybe 8 or 10, maybe less. I got a few charts up here. I'm going to show you the stacks them at this big. You know, we'll throw them up there. But each and every one of these charts I'm going to show you will illustrate that the markets have raced down to the OMNI Trading Academy's Proprietary Moving Average. That does not happen for no reason. Go back and review some of my videos. Whenever this happens, big market moves usually take place. Here is the list of markets, futures markets, that have raced towards the OMNI or are at the OMNI Trading Academy's Proprietary Moving Average right now. British pound, Australian dollar, Japanese yen, Canadian dollar, gold, silver, EMINI S&P, the NASDAQ, the EMINI Russell, the Dow Jones Industrial Average, the Transportation Average, the Footsie, the DAX, the Nikkei, the crude oil, the natural gas, the heating oil, the gasoline, the cotton, the coffee, and the cocoa have all raced to the OMNI Trading Academy. Traders, that usually signifies a fundamental shift in the economy coming our way. You've seen my fundamental shift videos before. I am not going to call this one the fundamental shift video yet because we are not completely through our proprietary moving average, but we are right there touching it in many of those markets, and some of the U.S. and world indices are now below the OTAPMA, or OMNI Trading Academy's Proprietary Moving Average. Very interesting, traders, and I got some charts to show you about that. Also, I am going to show you the charts, and in those charts it's going to illustrate that we must hold here. Now, on this pullback in the indices, else, hello, bear market, we're going to go back into a bear market. I was hoping to never say those words again for 5 more years, but if we don't hold the OMNI's Proprietary Moving Average, we are going to start to break down in world indices. And with no further ado, traders, let me show you some charts. Okay, traders, the first chart you were looking at is the Dow Jones Industrial Average daily bar chart. Each one of these green bars represents 1 day's trading. As I showed you a couple of days ago, we fell out of this beautiful parallel channel, started to break down, had a flat top, and look what has happened. In 2 days, we raced down and settled below the OMNI Trading Academy's proprietary moving average, and the industrials below the average, traders. We haven't been at this average since March of '09. Here we are, out of nowhere, it just breaks down, hits the average, and settles below. Now, not every U.S. index is below the average, but the industrials are right now. And the picture I'm seeing here, unless we hold and hold immediately, we're going to turn back into a bear market for a while. Again, I was hoping to never say that, but this picture is not a picture of a strong market unless we get back above the OMNI proprietary average and begin to rally out of here. For now, as we said in our last video installment, we are official sellers of rallies until otherwise told by analysis to begin buying dips again. So there is your industrial average, traders. If you pull any indicators on the indices at this point in time, they are all pointing straight down, technical indicators. So I'm only going to show you the bar charts. So there's the industrial averages. Let's go look at another. Okay, traders, this chart is the EMINI S&P daily bar chart. Of course, it is the March contract for 2010. We did break down out of a very nice support channel, or I should call it a support line because the channel was more of a wedge, so a support line. Broke through it right down to the OMNI's trading moving average, the Academy's moving average. It's our proprietary average that many times will tell us if a market is about to break or go the other way. So here we are, we bounced off the average. We did not settle below it. We settled right on the average in the S&P on Friday. Again, traders, we haven't been at this average since March. The closest we got to it was here, and that was in November, and then we exploded. But in March, we got above it and had a big rally all the way up to here. I do not want to see us settle below that average. For now, I am going to sell rallies unless we can get back into this wedge area. Again, traders, flat tops cause market drops. Here is your flat top. Look at the size of that drop. Very good rule, works well. The OMNI Trading Academy's proprietary moving average is very powerful. It also works well. The picture that we're seeing here is not a good one, again, unless we can rally out of this immediately. If we do not, a bear market will begin to ensue. Be careful here. Let's look at another chart. Okay, traders, next chart is your NASDAQ daily bar chart. Is the March 10 contract, a huge flat top. Flat tops produce market drops. As you can see, we had a nice big drop. What's scary here is we are now below, again, below this huge parallel channel that we've stayed inside of for a long time. Now we are below it right here. Not promising. Getting ready to test the OMNI average. That will likely happen Sunday into Monday. I am hoping for a hold, but I am not so sure that's what we're going to get here. Indicators are quite bearish, but you know how this market is. Buyers could come out of the woodwork. For now, however, we will trade the technical picture, broken down through this big parallel channel, had a flat top, had a few down days. Hopefully, this will not turn out to be two big down days in a bull market and explode. Although I shouldn't even say hopefully, right? Because we love the upside, but we will be trading for the downside on Monday. So one big down day, second big down day, but the fact that we are below the parallel channel with very bearish indicators, I say another down day comes our way. Technically, that's what I must tell you in this video. Let's look at a few more charts here. Okay, traders, this chart looks slightly different because I printed it from a different trading platform. However, it still works the same. It is the Dow Jones Transportation Average Daily Bar Chart, and this is the OMNI's proprietary moving average. They are very close to one another. We cracked out of nowhere and just began to break down. You have the OMNI proprietary moving average. If you get through that, you have a major support zone down here. If we get through that, hello bear market, it's going to get ugly here. I'm hoping for a hold. We'll see what we're going to get. That is the leader. It has not broken the average yet, but it is close and heading right for it with bearish indicators. So be careful out there. The leaders are absolutely racing down towards the OMNI average if they haven't hit it already. So very interesting that we may take out the support line. Extremely interesting that over 22 markets have raced towards this average in just the last few days. Again, traders, that usually will mean a fundamental shift is taking place in our economy. We will not call it that yet until all the indices settle below the proprietary moving average. I must admit, when you look around the rest of the world, a lot of other world indices have already gotten below the OMNI average as of Friday, Thursday into Friday, and they are pointing straight down. And I'm going to show you a few of them, so let's go look. Okay, traders, this bar chart is the daily bar chart for the London Footsie, Financial Times Stock Exchange Index Market. And as you can see, severe breakdown, rounded top, which is slightly scary, gets down through the OMNI's proprietary moving average. It did, however, run up and settle above it, but it got down through it with very bearish indicators and a bunch of U.S. indices not looking strong here. So the Footsie may end up breaking down tonight, Sunday night into Monday. We'll see what happens. Here is the important thing. We need to stay above this average. If we cannot in world indices, U.S. indices will drop as well. Let's go look at the DAX, traders. Okay, traders, the last chart tonight is the German DAX daily bar chart. Clearly, we broke down with this rounded top, just like you saw in the Footsie. This is the German DAX. We broke down severely, got through the OMNI proprietary average, settled under it on Thursday, broke down Friday, and settled here. Wow, look out, DAX. That is not a good sign, traders. So there you see world indices already below the average, U.S. indices, some below the average, some testing the average. That is not a good sign unless somehow all these indice markets hold that average, and I don't know if that's coming our way. Again, I'm a day trader. I put my stops in. I trade 1 day at a time. We take this 1 day at a time. Buyers, of course, as you know, can come out of the woodwork and shoot this up any moment in time. Of course, that's why you have stops in. But the technical picture here looks a little bit lousy, traders. Looks a little south to me. Let's see what we get. Pull your own indicators. Pull your own charts. Make sure that you look at the world indices and the U.S. indices because they all tie in together. So, traders, you've seen those charts. You've seen the OMNI proprietary moving average. Deuces wild here. 22 markets race down to the OMNI proprietary moving average on Wednesday, Thursday, and Friday. I don't buy it, Vegas. Vegas. I don't buy it, traders. This is Vegas. Deuces running wild on my OMNI average. I am keeping my eye on things. But I will say this, traders. We must stop and hold right here. Line in the sand. If the U.S. indices do not hold here, sellers will come out of the woodwork, traders, and we will end up with a big down leg. I hope that doesn't happen. But I don't hope trade. I trade what comes off these charts that I show you every day. They're not going to be right every day, but they're certainly a roadmap to where these markets are going more days than not. So make sure you do your homework and do it on daily analysis because those little charts, 5-10 minute charts, they give you way too many false signals, traders. You want proper signals. If you're going to trade for a day, use a daily chart to get your signals from. You don't use a 5-minute chart for day trading. If you are the type of day trader like we are here at the OMNI Trading Academy, we look for the trading terms, the oscillations in the market. We get in at a certain spot, we look for our nice big roll up, and then we bail out. We're not in, out, in, out, in, out. So we use a daily chart to find that rotation. If we went down to a 5-minute chart, we'd be getting in and out so often, I don't know what would be the right direction for the day. So we use our daily charts, weeklies and monthlies. It gives us proper direction. It gives us proper trend direction. And usually will give us proper daily direction. So use your daily charts. Traders, as always, a stop is your best friend. Never trade without stops because let's face it, we have bounced in some markets off the OMNI's proprietary moving average, right? If the buyers want to come in, that's the moment to come in. If they don't and we break it, well then, hey, don't fall in love with the upside. We'll come off my board for a few weeks. We'll see what happens. Don't fall in love with the downside. I'll come off my board for a few weeks. We'll see what happens. Wow, that's 2 in 1 video. We might have to reshoot these if I keep this up. All right, traders, you only get 1 take from us here. We don't reshoot, so you get what you get from me. In any event, remember, the OMNI flip-flopping almost always leads to a market move, a huge one, and usually in the opposite direction of late. Flat tops do produce market drops. You saw that for yourselves on Wednesday, Thursday, and Friday. We are at the OMNI Trading Academy's proprietary moving average in 22 markets, and if they break through, this market is going to get cracked pretty hard, meaning the indices. And again, my analysis tells me we must hold here where we are, otherwise bear market for a little while is coming our way. Let's hope for the bull market. Let's have our stops in. Come on down to the OMNI Trading Academy. Traders, you can reach me at www.livewithoscar.com. Jump into the chat rooms and have yourselves a good day. We'll do the best we can to make you a better analyst and a better trader. And most of all, to teach you how to come up with a trading plan and stick to that plan the next day no matter what happens in the markets. Most important to have discipline, a trading plan, and act on that plan when the market reaches your levels. All right, traders, I'm going to jump into the chat rooms and take a look at these markets because things are whipping around and I want to get in there. So I'm getting out of here. Give us a call anytime, day or night, 702-629-4755. And always keep your emotions out of trading. One of the best things you can do to help yourselves with this is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.